And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out.
Whoa. It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. And welcome to my podcast. Hope you had a great weekend. Now back to work. So today, what happens? The yields bounce off the 4%. Now remember, we had a drop from February 9th, I believe, to today, a drop of 4%. But the funny thing is, what existed, what caused this drop of 4%, is not gone. It's still with us today. In spite of, listen to this garbage. Go ahead.
I mean, I think we just have to step back for half of a minute here and realize that and appreciate that the economy is growing close to 5%. Yeah. And if we didn't have the shutdown in November.
That's just insane. Here's how they work. So they just make this up. So nothing's changed. Everything that caused the yield to drop is still with us today. The market's not getting stronger. They just keep flipping the narrative of the day. Now, she's saying we got a GDP of 5%. No, we don't have a GDP of 5%. What they do, the jibber jabbers, is they go back and try to grab onto something, because remember, their job is about peddling optimism. So they go back and they grab the third quarter of 2025, GDP of 5%, and they keep peddling it. But the real GDP is 1 to 2%. That's the truth, 1 to 2%, not 5%. Again, that's what they do. They peddle optimism. That's their job. So that 4% is a major support. So when it hit that 4%, it bounced up as it always does. It'll settle down here, but you don't start rotating. Some of these jibber jabbers were suggesting today, if you're long, you should flip to shorts. If you're short, you should flip to long. What are you, nuts? This is support. It's a support line. That's all it is. And when you hit support, you get a bounce. If you hit the 50-day moving average, 200-day moving average, you get a bounce. And it goes back down again as long as the trend's down. The trend hasn't changed. But they want you to believe it has. They always got to bring up optimism. That's their job. No. 4%, that's where the yields are. But these TV jibber jabbers, they're going to peddle, grab onto that quarter 3 of 2025, keep saying GDP is going to be 5, maybe even 7%. But it's not. It's not going to happen. So what they're peddling today is not the real economic story. It's not what you feel every day. It's not what you feel when you go shopping or go have your car fixed or pay for your kids' tuition. So nothing has changed. And that GDP of 4%, why did they come in and start buying today, buying treasuries? Because they don't want it to drop to 4%. You start dropping below 4%, you get a red flag. That's right, you get a red flag. And so that's why, again, they don't want those yields to drop. So because, remember, business spending is still terrible. Retail sales are still weak. Credit stress is rising. The banks try to go get a loan, see what happens. Oil, okay, again, is staying right that same area, that 60, 65 area. And not that there's demand, there's no demand for oil. They're cutting production. But the jibber jabbers say, oh, look at this. Oil is at 65. Wow, that means there's demand. The economy is strong. We're going to have a GDP of 5%. Oh, crap. Unbelievable. Just garbage. So these are yields dropping. That's it. A one-day bounce off of 4%. A 4% support. That's it. It doesn't erase what got us to 4%. It's still with us. Everything's still with us. And if the jibber jabbers say they want you to flip from your shorts to your long, you got to be nuts. If anything, take some more profits, reset your stops, let things settle out for the next couple of days. Stop listening to these jibber jabbers. It's unbelievable. So again, institutions did not rotate today. Follow the institution money. Remember, when you get the yields right, you get the market right. That's why you got to follow the bond yields, the most important thing, because you're following the money. That's where the institution money goes. Institutions follow the yields. When they see yields go up, they put money in. See yields go down, they put money. They start taking money out. Yields always been. Don't listen to these idiots, these jibber jabbers. So again, when you get a yield right, you start following the bond market every day, like we do here at Phil's Gang. That's why we always get the market right, because you follow the bond market, you follow the yields. That's all you have to follow. And 90% of traders don't even know what the yields are. Don't even know what a yield is. Most people don't even know what volume is. Some people don't even check the volume bars. Now we're back again to today again. Another problem showed up again. AI jitters. Oh, they're all upset again. All again, AI. The returns aren't there. Then gold drops today because the tensions between Iran and the U.S. are easy. And tech is still volatile. And China markets are rallying. Oh, big deal. On trade optimism. See, they have optimism too. China has optimism. We have optimism. Everybody's got optimism. Just stay optimistic and everything's going to be fine. You're going to be rich. Just be optimistic. Don't pay attention to the truth. Don't pay attention to the fact. Just be optimistic. Close your eyes and be optimistic. You're going to be rich too. This is nuts. So again, always remember, it's all about yields. You get yields right, you're going to get the stock market right. And you're going to make money. You're going to make money. That's how it works. Now, when there is rotation in the market, the majority, almost all retail investors, we call tourist investors, they always lose money on rotations. They don't know what a rotation is. They don't know how to read a rotation, and they always lose money. Every rotation, they lose money. They don't know what they're doing. So, because they have a herd mentality. Who do they listen to? The financial guys, the TV jibber jabbers, the financial peddlers. And when they're told by the TV jibber jabbers that yields are down, buy tech. What do you think they do? They buy tech. When they're told that yields are down, buy home builders. What do you think they do? They buy home builders. Yields are down. Short banks. Guess what they do? Short banks. The mistake is they do what they're told instead of asking, well, wait a minute, can I ask a question first? Why are yields down? Nobody ever asks, why are yields down or why are yields up? You got to ask that question. You just don't follow these jibber jabbers on these TV shows blindly. I mean, you're following a bunch of dopes. A bunch of dopes. They're peddlers. They're peddlers. They're 2 notches below used car salespeople, I guess. But they never ask. They never ask. The retail investor will never ask, why are yields down or why are yields up? And then they don't follow the institutional money. Because when you follow the institutional money, you're following the yields. Because the institutional money is always in the right position every time. They know exactly what they're doing. And that's why they don't get chopped up. But that's why retail investors lose up to 93% of retail investors lose money. It's just ridiculous. It makes no sense. So you've got to learn to stop listening to everything you hear on these financial shows, or you're going to go broke in the stock market. Just like when your brokers used to tell you, right? Diversify, diversify, diversify. Yeah, diversify right into bankruptcy. So a lot of the retail traders, tourist traders today got hurt badly. And they don't understand what that 4%, we hit 4%, what that meant. So do not listen to these people. Now remember, we had a great opportunity last week when the CPI came out. What happened? Gold flipped back and forth. First it was down, then it was up. First down, up, down, then up, then down, everywhere. So that means that our gold, our miners are giving us a great opportunity. We're going to make money both ways. Here, let me show you my charts. So the golds right now are in a severe downtrend. The miners, all the gold stocks are in a severe downtrend. And what's happening is they're stuck in no man's land, but they're not really, because this is going to be one of the greatest trades ever, because of the fact that the CPI came out and there was no confirmation there was going to be a rate cut, no confirmation going to be a rate hike. That's why gold got tossed back and forth. So that set up our stocks perfect, especially our GDX and the juniors. So you can see what's going to happen here. So the trend is down. As long as the trend continues to go down, that means we should take out this low. If you take out this low right here of February 5th, you're going to make a lot of money trading GDX short. But guess what? If volume starts coming in and they start pushing GDX up and they get above this high here of January 29th, you're going to make a lot of money. When was the last time you had a trade that you can't lose? You can't lose. I don't remember. I mean, this all happened because of the CPI garbage. So again, we're going to make money if it breaks to the upside. We're going to make money if it breaks to the downside. And if you look at all your gold stocks, even your Barrick gold, same thing. It's got a nice downtrend. The minute it breaks that 50-day moving average, you're going to have a good short. If the trend turns because volume comes in, then you wait till it makes a new high. And that's why you should come to our webinar that we're going to have this Saturday. Limited to 60 people. We're more than half sold out now. And it's going to be great because we're going to talk about things that the jibber-jabbers don't talk about. We're going to talk about shorting. We're going to talk about what are the things that you need to know that when there is going to be a crash. Crashes just don't occur. They don't work. They just don't work that way. You get a lot of signals when you get a crash. You get signals like IWM, your small mid-cap stocks, one of the greatest signals. It always tells you when you're never surprised. You're never surprised by a crash because you always look at IWM. And IWM will always tell you in advance what's going on and if you're going to get a correction or a crash. And you also have spreads. We have spreads. And spreads we watch every day. That tells us if we're going to have a correction or a crash. And so again, you got all these safety valves there. You just don't wake up in the morning. Everybody still thinks October 1987, they came back from lunch, oh my God, the market crashed. That's ridiculous. The market was crashing since January. Since January. My father was short stocks in January. For God's sakes. So October is a big deal. Wow, we just look at it, we all went to lunch and came back, I'm broke. Well, no, it doesn't work like that. It doesn't work like that. And there's a reason that you have trends, okay? And the trends are your friends. And if you follow the trends, you're always going to be correct. And in following the yields, you'll never be wrong. I mean, when you got all these yields that are declining, and they're still going to decline, that's telling you we got some real bad stuff going on. And you can fix it. That's the nice thing. You can fix it. And the other good thing is that you have, again, you have, one of the things that people really get screwed up on is fundamentals. They keep following fundamentals. You want to get screwed up trading? Keep following fundamentals. First of all, you shouldn't trade any word that the first two letters are FU. I don't think that's a good word, especially with FU. It's sending you a message. You're going to get screwed. And all you got to do is follow the money. Now, gold, remember, gold is going to just get stronger and stronger and stronger because, first of all, let me tell you what's going on now. Europe, they are buying bonds like crazy, like crazy. That's going to drop the dollar. That's going to move gold up. And you've got all the global banks, they're increasing their purchases. Stop following the noise. Follow us this Saturday from 12 to 3 p.m. $100. Check it out, philsgang.com.